afternoon, everyone. Very welcome to this webinar on the current state of the South African economy. My name is Annetjie van Rooyen. I'm the key individual and the CEO of MyWealth Investments. We are a subsidiary of Regenesis Business School and the company is an authorized financial services provider. Please note that this session will be for information purposes only, and the intention is not to provide you with investment advice. We apologize for the delay. Annabelle unfortunately had some technical issues on her side, but we will do something to get her on the panel as soon as I have finished with the introduction. So I would like to welcome all our participants that are online, who have joined online, and then a very warm welcome to David Shapiro, the Chief Investment Strategist at Sasfin Securities. We really are privileged to have him here, and he's a regular market commentator on TV and on radio. He has recently returned from the US. He might share some interesting insights from his trip to the US with us. And we have Annabelle Bishop, who is the Chief Economist at Investec Bank. So what we'll do is we'll categorize the conversation into the failures, or what we view as possible failures or challenges or headwinds that the economy has been facing. And then we will see which opportunities arise from those challenges. And then we will look at the successes and also the risks and possible headwinds going forward. So we'll analyze it from a macroeconomic point of view and see how that fits in with the Johannesburg Stock Exchange and how it affects your investments and how you can steer your ship through the investment environment with the current headwinds, and how to look forward and how to navigate yourself through these circumstances. But while we're waiting for Annabelle, I'm going to ask David to just say hello and give us a little bit of an overview on himself for the youngsters who don't know him. David, thank you for joining us today. Thank you for making time. We really appreciate it. And like I said, we are honored to have you as a panelist. So just tell these youngsters a little bit about yourself and your experience.
Are you kidding me? Well, I think I joined the stock exchange when most of the youngsters' parents weren't even born or weren't even married then. I joined in 1972. I'm a chartered accountant by profession, and soon after qualifying, literally the day after, I joined the stock exchange. I was there in the 1970s. So I've gone through a lot, and it's very interesting that I was there when South Africa was a major force, in the world. When I say major force, a force in the world economy, simply because of the power of our mining industry. We were the resource capital of the world. We dominated certainly the gold mining side of things. Gold was still very important, but there were a whole array of metals which are still around. They're still in the ground. At that stage, De Beers was still a very powerful force. And so I've gone through quite a few cycles. And I think the one lesson is that South Africa was built on entrepreneurship, which I think we're lacking today. It was built, the mines were built on venture capital. What was a mine? Nothing more than a hole in the ground or the promise of something that was underneath that. And, I enjoyed, we dealt in gold mines. Everybody thinks we dealt in gold, but I mean, it was so vast experience. And I've gone through many cycles. So still enjoy the market, still lots of opportunities. I think I'm very happy with where we are at the moment, but a lot to discuss.
Yes,
can answer a lot of questions.
Thank you. Luckily, I'm in the seat where I get to ask the questions and you have to provide the answers. So you and I can kick off, David. I think, recently over the last couple of months, we have seen so much negative commentary on the South African ruling party and failures. Obviously, the biggest of all of them is the state-owned enterprises, which have been milking the cash resources of the country. And we have been compared to a failed state, and certain CEOs have come forward and said that we are moving towards becoming a failed state. And I've done a bit of homework, and I don't think it's fair to make such negative comments, even though things have been pretty bad. You know, if you look at other failed states to the likes of Libya, Yemen, I don't think South Africa is anywhere close to those kind of countries. I don't know what is your feel, and how do you experience it, and how did you see that those comments filtering through to the market? I mean, from a macroeconomic point of view, we've all seen the rand that weakened substantially as these comments started surfacing.
You know, if you look at the rand, it's down, I think in the last 2 years, 23%. Now, that's massive. Why I bring that up? That means that in essence of purchasing power, and I always use the dollar as a guideline, it means we're 23% poorer than we were 2 years ago. Now that's big. But where I touch on it and where I get my guidance, I think Annabelle is. I'm just sorry she's not on, because she's far better equipped to give you the economic side of it. And why I say that is that I always take my guidance from published results. I always look and see what the companies are saying. And, you know, and I'll use recent results. You know, Monday, Anglo Platts came out and said their profits are going to be down about 60%, you know, because of falling rhodium and palladium prices. Now, this is not directly associated with South Africa, but where it's important from South Africa's point is that where these mining companies start to have lower profits, and the reason those prices came down was more world circumstances, but it means that from a revenue collection point of view, things are a lot lower. In other words, we're going to be collecting a lot lower revenue at a time where the economy is teetering, where it is finding difficulty. You know, they also mentioned the problems that come with load shedding. Remember, a mine, I mean, they need a huge amount of power to drive mines. I remember back visiting St. Helena many, many years ago, and the mine captain told us that Vaal Reef, which was in the vicinity, consumed more electricity than the city of Johannesburg. So, and a lot of it has to do with cooling. You know, you've got to cool. When you go underground, you need massive amounts of power to keep the miners cool, and otherwise, of course, they'd freck. So I think I get a lot of the I get a lot of my guidance from companies and how they are facing up to the economy. We've had ArcelorMittal out, we had Pick n Pay in the recent things in yesterday as well, also with results which reflect what's happening in the basic economy. You know, the one thing I liked about ArcelorMittal, they said, with load shedding, we cannot build an operating rhythm, which is so essential for steel production. So companies are coming under a lot of problems because of, I don't want to call it the fail state, because institutions, government-run institutions, are failing or not delivering what they need to for companies to function properly. Particularly the two that stand out, and we know those are Eskom and of course Transnet. So yes, a lot is happening around there. I don't want to go on too much. You know, we can keep the discussion going around these things.
Yeah, and I think, I agree with you 100%. It's we look at it from a different angle. We have to analyze the company results and determine what the valuations are and see if a company is undervalued or overvalued. And I have also learned in my career as a stockbroker that things that happen due to politically motivated actions or due to politicians making mistakes, it can often cause a knee-jerk reaction. On the rand, first of all, that's where we see it always. We see it first in the rand. And then the unfortunate thing is, as your currency weakens, that does have an effect on inflation, and inflation affects your consumers, and it has a ripple effect through the economy, and you see it in your company results. The issue with the load shedding, it was bad. It one point it was really bad, but luckily we have never experienced a blackout. And then we did see an improvement in the load shedding. And I also feel that especially the South African currency is influenced by so many factors, not only domestic factors, but also on the international front. So all these things that you have mentioned, I think it's important to add to that you also have to look at the global economy. We still have to deal with the repercussions of COVID. And not only that, China are still battling. We're all looking for growth from China, and they keep disappointing, and that has a direct effect on us. Plus, these commodity prices have come down, which is great for inflation, but you do have that base effect that's coming through, and we've seen that in a couple of results as well. So, your thoughts on that? And thank you so much, Annabelle. We've just jumped in, and we're going to let David finish his commentary, but he's busy with it. Then I'll come over to you. David, please finish that.
You know, the rand at the moment, 1774. I mean, as you mentioned, it is influenced by so many factors, but we can't ignore that there's structural problems as well. At the moment, the strength of the rand has come because the dollar has weakened. And I don't think we can claim any victory for that. You know, if the rand does, if the dollar. Why I look down there, I get these messages on my computer. We're going to start. You know, you got 4 minutes 50 seconds. If you don't stop it, we're going to close you down. Some new update. So please let me just give you one. I've done it. I hope I don't get knocked out. You know, those are the
we'll get you back on
issues. But what I'm trying to get at, the rand 773 at the moment now, you know, not too long ago we were in the 1880s and that. And it is as a result, we saw British inflation lower yesterday, so the pound picked up. We've seen money flowing into the euro, flowing into the UK markets, and that as people start to shift their finances away from the US on the belief that rates are going to start coming down. So you see these monetary movements which do influence the rand. So I think, you know, what you're saying there, it's not only what happens in South Africa that influence the levels of the rand, but certainly outside factors as well. But to try and call where the rand is, you're going to let your reputation go up in smoke. So don't ask us to forecast it. Annabelle might want to do that, but don't ask me.
She's won an award on forecasting inflation. Congratulations on that, Annabelle. So, Annabelle, just to bring you in the loop, I don't know how much you've heard from our previous discussion, but we're starting off with what we see as, what the rest of the world see as failures in the South African economy. And I think what David and I both are saying, that it's not that bad. It's not as bad as it's being made out to be. Because I suppose also that's why they say hindsight's a perfect science. Because if you look back, 6 months ago, it looked like everything was just doom and gloom. But now the load shedding situation has already improved. We still deal with all these structural constraints and the SOEs that's been bulking the cash resources of the country. And, you know, they haven't been delivering. But at the same time, we also are making progress every day. There's been a little bit of positive news. Transnet is partnering with private sector, which is what we said for a long, long time, exactly what we need. So from a macroeconomic point of view, can you please give us your pointers on what you see as the biggest failures and how that will flow into opportunities that we'll discuss later. Thank you.
Yes, of course. I think, maybe even taking a little bit from the presidential initiative at the moment we've got now with business, the presidential partnership. They are saying the three biggest areas in South Africa of concern is the electricity crisis, the freight or rail and ports crisis, and of course as well the criminal mafia, state capture, general problem we have in that front as well. And as you know, we've had various key business leaders set up to hit these different areas where the government and here we talk about the president, arm of the government and the private business sector working together to try and address them. So electricity, of course, a huge problem for South Africa. When we're at stage 6 load shedding, we're actually at stage 8 load shedding because of the fact that we have to have load curtailment. And what that really means is that Eskom phones up your large smelters, your large manufacturers, and says to them, you need to stop producing tomorrow. You need to obviously not run your factories for several hours, and then that load curtailment equals sometimes similar to 2 stages of load shedding. So we've actually seen situations this year already to date where some days have actually moved up towards, in total, what would be a stage 8 if you take those 2 stages of load curtailment into it as well. That just tells you how grave this crisis really is. Of course, as well, similarly happening on the port and freight road and rail situation. We've had damaged roads, we've had terrible accidents, we have insufficient capacity on the rails. We most recently, there's been commentary coming through about insufficient rolling capacity. Those are actually your engines, your trains, and then of course as well through the ports. So you very positively and correctly identified the private public partnerships, the getting the private sector involved. Interestingly for South Africa, we're an African country which doesn't have a privately owned and managed port. Other African countries have that. And, the reality of the situation is that we need to obviously have strength in our productive factors of the economy in order to have strong economic growth. We need to have more than enough electricity. So if we're 6,000 megawatts short, the fact that our renewable energy program might actually run to over 66,500 megawatts, and that's what's being planned and thought of, not actually what's being passed or in the process of being built. That just shows you the huge appetite out there. Now, to get that appetite translated into reality, we need strong processes coming through, good bureaucracy, good regulation, but of course also as well we need the transmission lines. It's all very well producing the electricity in a large solar plant in the northern province. We need to get that electricity onto the grid to the rest of the country. And of course the good thing about solar electricity is that the sun tends to shine in South Africa during business hours. So that's a very strong factor for us. But of course, the problem is that we don't have enough electricity power lines. Our Minister of Energy and Mines, Gwede Mantashe, has made a lot of commentary, and I've read some white papers where he is very positive and supportive of expanding transmission in South Africa, and of course the private sector getting involved in the build. Also, of course, as well from a National Treasury point of view, with the debt relief program, they again talk about the private sector being required, not just for the build of production of electricity and the running of the power stations, but for transmission as well. And in fact, Gwede Mantashe also talks positively about a overall centralized management system for electricity sales and distribution from the private and government sector to the public. But lastly, there is the problem, obviously, he has this attachment to fossil fuels. And that has been one of the reasons why we haven't, of course, seen the renewable energy rollout that we should have seen. And if we had seen it since 2019, we wouldn't be in this dire load shedding stage that we're in. So opportunities are there. The renewable energy projects are passing through the bid windows. There are always some problems here and there. And of course, regulatory support needs to be bolstered still. But we are going to see some new renewable energy projects come through next year. And of course, going forwards, already we've seen the private sector build their own electricity self-generation, whether it's solar panels on households or businesses, large industrial users looking to move off the grid and produce their own electricity. So a lot of positives and opportunities there. Similarly, looking in the rail sector, mining industry looking to get heavily involved in partnering with government and actually running trains on the tracks as well. So again, a very positive forward-looking potential approach. Let's not forget the green hydrogen economy, which of course could contribute to reindustrialization in South Africa as well. But of course, some of these things are slow to happen because infrastructure projects are slow to translate into reality. Some of them are slow to happen because there's still some government regulatory blockages in the system. And of course, as well, we are finding ourselves in a situation where demand is also quite weak. And that has been another reason why we have seen lower stages of load shedding over winter. But I think looking forward, there's definitely a lot of opportunities in South Africa. And I was listening to a green hydrogen conference yesterday, particularly commentary coming from Germany about the huge potential for the most enormous growth projects for South Africa. So I think, there really is, again, a positive side to it, moving more rapidly to mitigate climate change in South Africa, as we have to move away from our failing coal power stations and into the green and renewable economy.
Thank you. Thanks, Annabelle. David, based on what Annabelle has said, is there anything else you would like to add regarding the effect that load shedding had on these mining companies and our retailers, the SA Inc. stocks? What did you witness in the market? How did it affect the valuations? And do you think it's justified?
I think the question to Annabelle is the one that I introduced, was going through Anglo Platz's numbers on Monday. I mentioned that their profits are going to be 60% down. The concern is this flows through to the fiscus, and that's a big worry. Now, it's not only the mining companies. Remember, we've had coal prices come down as well, which means lower receipts. But thereafter, if we start, let's take Pick n Pay's results, where they're dramatically down, or ArcelorMittal's results, where they're going into loss. That means no tax. So what my concern is, and the question to Annabelle is, I know we've got all these projects up, and we know they're going to happen. They can happen if government just relents. When I say relents a little, just moves away from political ideologies and allows it to happen. Entrepreneurs are there to will step in, and I'm sure we'll find the cash. My worry is about in the short term, while we might see rates start to come down on the short end, my worry is how is this going to affect the long end, and how is this going to affect government finances? Because wherever we look now, company results are under severe pressure. So I think that to me is a big warning in the short term.
Yeah. Annabelle, so in terms of fiscal consolidation, that's been really going well until the February budget, and then all of a sudden the whole picture changed, and the finance minister was interviewed on Bloomberg earlier in this week, and he said that in the October medium-term budget policy speech, they will have to adjust their growth numbers lower. He didn't say by how much. So what is your expectation? How will all of this bad news from the corporate front filter through to the fiscus, and how will it affect us in terms of that fiscal consolidation that we so desperately needed?
So I think, that's really the key point, the short-term effect of the severe constraints that we had from a productive capacity side, from the slowing of the global economy, from higher interest rates there, and of course as well the sentiment issues that you mentioned. We expect this year we'll see a revenue underrun. The last few years have seen a revenue overrun, more revenue collected than expected. Part of that has been from the commodities boom. We obviously have seen flagging commodity prices this year, but in particular, we have seen a real strain come through from the inability of government to provide the services that we need to get our goods out of the countries, particularly bulk commodities that rely on the railway system and the ports. And of course, that will come through and damage government finance figures for this year. We noted that both the GDP growth and the inflation figures need to change in the government National Treasury, the forecast that they put through. They're going to have to lower their GDP growth figure. It'll likely be close to about 0.2%, which is really the consensus now for this year, which obviously will mean that they're going to see some push up in their ratios. Of interest, however, is that the inflation figures were a bit low as well. So that does mean that on a nominal GDP basis, there will be some little bit of compensation from that side. We think overall there will be some strain on government debt and fiscal ratios. They come through as a percentage of GDP. So you look at your gross government borrowing debt levels, and that's as a percentage of GDP. So if you're making your GDP a bit smaller because you're revising down your forecasts, although not too much smaller because you have some compensation coming from your inflation side, all nominal, then obviously that will push it up a bit. So we will find ourselves in a situation now where we think that there's going to be slightly higher pressure on government debt and deficits coming through in the October MTBPS yes, we think the minister will be judicious, our Finance Minister Gondwana, and he won't push through a scary scenario. We think he'll be careful. He'll revise his figures to what is prevailing in the market at the time when they do their calculations, both from an inflation and from a GDP perspective. They will obviously, hopefully, get a little bit of push up, as they always do, from revenue, from their repair and improvement in SARS. They could get a lot more if they go for bigger areas where they're trying to capture more tax, such as the taxi industry in South Africa. But nevertheless, returning to what government has relied on the past few years, it has been a heavy reliance on commodities in South Africa. It's very interesting that government relies on its money from the commodity sector and yet lets the factors of production which drive the commodity sector, such as electricity and transport, collapse around it. So I don't think enough's being done on the Transnet side. I don't think the people who are running Transnet have got a firm grasp of what's needed. I don't think they are as open to participation of the private sector as they need to be. And lastly, I think that they still are looking at some inaccurate policies. All these state-owned entities need to be self-financing, self-funding. They need to earn enough money to run themselves, and Transnet still bleats on about getting government handouts. So I think that is an incorrect approach on their part. But we do need to move forwards and see a strong environment for productive factors in South Africa. Productive factors include anything that supports business. Includes business confidence as well. And those, of course, are driven by what happens from a government regulatory point of view, but also driven by what happens overseas in terms of the strength of a global economy. But most particularly, it just means that businesses want to be able to have demand for their goods and services and be able to produce their goods and services. And if you're not allowing many mining companies to export the goods and they're stockpiling their minerals and metals because they can't get them out the country, well, then you're not going to see the sales that you need to put the money into your government coffers. Don't know how much more simple it needs to be, but I still think there needs to be huge changes and reworkings at Transnet. We see it coming through already in the electricity sector, and we talked about how it is by necessity slow because infrastructure projects are slow. I don't think the crisis has yet landed at Transnet.
Yeah, and then at least there was some good news. I think it was yesterday afternoon, the news broke that Putin will not attend the BRICS summit. So at least now that is one of the risks that we can eliminate. So that for the rand, that is very good news. But we still have the AGOA agreement, and I think that will be evaluated sometime next year. Do you have any views on this, and what do you think the chances are that we'll get punished by the US for the government's shenanigans with Russia? I know the finance minister did comment he doesn't expect South Africa to get kicked out, but this is very important for our economy, and you can perhaps elaborate on that, how it will affect the automakers industry in South Africa, which is quite a large contributor to GDP. And some of these companies like BMW and Ford have invested billions in this country, and how it will affect automakers if that does indeed have a negative effect or outcome.
So I think the one thing we need to understand about AGOA is it's actually the African Growth and Opportunity Act. So it's US legislation. It's not a treaty, not a bipartisan treaty. It actually has no benefit whatsoever to America at all. It's a legislative act that they either pass the legislation or they repeal it. And if they don't have the legislation in place for South Africa, and there are many factors which could cause its repeal, then we don't benefit from it. What it is that it actually allows us to have lower tariffs. Makes our goods cheaper when we sell them overseas, obviously in America, yeah. And the point that we try to make is that if they repeal it, for a number of reasons, Seychelles actually migrated out of it because they became more of an advanced economy. They didn't qualify. South Africa is unlikely to be able to say that it's had a better economy over the past 5 years or even 10 years than it did prior to that. But of course, as well, we are still not a underdeveloped economy. It really is aimed for poor, underdeveloped economies in Africa, not really for a developing emerging market, so they could always use that as a reason. However, it hasn't been a reason in the past, but what is more key is that if you go through the large amount of legislation contained in the Act, one of the things they talk about is humanitarian abuses. They talk about countries who benefit from AGOA not being aligned to America's views in terms of who it perceives to be countries that are threats around the world, who it perceives to be enemies of America, to put it very simply. And of course, that obviously would be Russia. America not taking it all kindly to the Russian-Ukraine war, heavily involved in aiding Ukraine in its fight against Russia on the invasion of its territory. So what we really found ourselves in a situation is that South Africa's perception of being too close to Russia this year, not having a neutral stance, did actually place AGOA at risk, both because we saw two different parties, to the two key political parties of America's legislators comment in a group that South Africa is likely to lose AGOA and actually not host the AGOA summit this year because of their allegiance to the Russia. And secondly, also, of course, as well, because of the fact that we really are finding ourselves in a situation where we are not showing strong support for the Ukraine and for the West. So all of these factors obviously are very worrying. Yes, the fact that we are part of BRICS, there's nothing we can do about it. And with Putin not coming to South Africa, obviously means that we roll back that threat of having to arrest him when he lands because we're part of the ICC treaty. But nevertheless, it doesn't actually end the fact that there will be other Russian ministers coming to South Africa. And of course, as well, again, that's not going to be viewed very positively by America. So what does AGOA actually mean? If we have a look at the trade of South Africa with the West, about 40% of our total exports of trade is with the West. Only 0.2%, that is basically 0% of our trade, is with Russia. If we lose AGOA, we might lose about 5 to 10% of our trade. Ultimately, it is really a situation where we can still export to America. We just don't get preferential, cheaper prices on our South African goods when they are there to be sold, which then obviously means, do people still buy them or do they change to buy something else? So that will have a slow negative effect on our production, because obviously we'll continue to produce, we'll continue to export. As there's less demand and stockpiles build up, then obviously there'll be less demand for production. So that's really the risk of how it could happen. The broader risk, however, is that if you see sanctions applied against South Africa from the West in general, then we are at risk of 40% of our trade being lost. And of course, that would be a huge negative impact on South Africa. At the moment, we don't think that's a likely scenario. We think that South Africa has managed to claw itself back a bit in terms of international geopolitical relationships. We've had a number of countries from the West come to visit us. We've had President Ramaphosa himself go to France. In fact, the French president might even come to the BRICS summit. But all of these political factors aside, we really still find ourselves where geopolitics continues to play a big impact. In fact, on a more broad basis, the defragmentation of global trade and deglobalization has been one key reason why we have seen higher inflation around the world. And of course, that also has, of course, fed through to global prices, domestic prices. But it also, of course, has an impact looking forwards in terms of how these relationships work. We've seen recently that the Black Sea deal crumbled. And of course, what that means is that Ukraine can't export its grain through the Black Sea. It's a big problem because they've just had another big bulk harvest. However, interestingly, it was already crumbling in the last few months. And in fact, actually, the Ukraine's now sending a lot more grain down the Danube River. And they think they can double that export capacity of 1 million tons a month to 2 million going down the Danube River. So there's less concern there now than there would have been last year because of these Black Sea issues. In fact, it actually was a year ago in July when they struck the Black Sea grain deal. Interestingly, however, what also happened at the same time is that the United Nations brokered a deal to allow Russia some access to SWIFT, which is our international banking system, and also as well to help them with some agricultural exports and fertilizer exports. That deal has also now been terminated because Russia terminated the Ukraine Black Sea grain deal. And in fact, that is going to be quite detrimental for China, who was the biggest beneficiary of exports from Russia, from its grain and obviously fertilizers under that UN deal. So there's some hope that China might speak to Russia and perhaps get that deal back on the table. But it just talks the point you're making about how very volatile the global trade environment really is and how that has an impact not just on economic growth, but of course as well inflation, interest rates, and generally sentiment around the world. I think we are in a much more fractured environment than we have been politically previously when we looked at it before COVID.
100%. Thank you, Annabelle. David, your comments on what Annabelle said?
How can I match Annabelle? I mean, beautifully put. The only point, I've just returned from 6 weeks in the US, And I didn't hear South Africa mentioned once in all the newscasts that I listened to and so on. I don't think we're an event. Now, I don't mean that in a very negative way. I think they've got a lot of other issues that are of greater importance. What they do want to maintain is ties with Africa. And South Africa is always seen as a big force, as the big man on the continent. Even though Nigeria and other economies, Egypt and that might be might be bigger in terms of nominal GDP, but they want to maintain those ties with South Africa. Sadly, whenever I used to go there in the past, they would always ask me if I knew Mandela. When you look at the geographics, when you look at the people in America at the moment, I'm talking about the demographics, they don't even know where South Africa exists. So from our point of view, I think AGOA will continue. I don't think they want to tamper with it, although what Annabelle said is absolutely right. They don't like people who cozy up to their enemies. Especially the Republicans, and that it's a very big no-no. So there is always the risk in future elections. We always remember what Trump thought about Africa, and which we can't repeat. But I think it can. It's always an issue. We're such a small part that they will ask these kind of questions. Remember, when it comes to diplomacy, everybody's very polite to each other, but you don't really know what's bubbling underneath. But we've got to be careful. We've got to be careful who we cozy up to, and particularly where it comes, when Annabelle talks about these projects that are on the horizon, in all things from Transnet through to electricity or power generation, we've got to be very careful about how we conduct ourselves, and it becomes uncomfortable for the banks to lend to us. So it's not that the banks don't want to lend us money. It's either shareholders or principals of the bank who say, "Why are you doing that? Do you know who South Africa is?" So if you go back to '85, and you remember when Citibank, I think, pulled out, that was the end of apartheid. That was the beginning of the end, when they decided, to pull out, and that always becomes a risk. It's not the political flows; it's the capital flows. It's not the political views. It's capital flows which can crunch a country.
Exactly. Thank you. Alrighty, then the last point under failures I have is the grey listing, and we've been in that grey listing period for probably 6 months now. Any views on that, Annabelle? How long do you think will we stay on this period? Are you aware of anything that's being done aggressively to get us removed from that list? Any comments on that?
Sorry, yes. Look, I think we were not unsurprised by the fact that South Africa was grey listed. Interestingly, actually, FATF, which is the Financial Action Task Force, which did grey list us on the 24th of February, they came about by looking at drug cartel proceeds in South America. And that was an interesting area for them to actually look at money laundering. It's obviously grown now to worry about people who provide financing for the proliferation of weapons of mass destruction, and also, of course, as well, terrorism financing. But more recently, in the last few years, what's actually changed for FATF is that they actually no longer only look at it from a legislation point of view, which South Africa mainly did very well on. And in fact, from a bank supervision point of view as well. Also, South Africa is very highly regarded. Where we fall down is the lack of prosecution. We just do not get the corrupt and those who are laundering money behind bars, and particularly FATF says remove the proceeds of these criminal actions. So, for example, if a government official is channeling money away from an infrastructure project that he's supposed to be building and putting into his personal bank account, perhaps buying property and other assets with it, then obviously that individual, if he's proved to be corrupt and a thief, needs to be prosecuted and the assets taken away from him and returned, to government's fiscus, obviously, at some point. The point really here as well is that it can be more subtle. You could be leeching money out of Eskom, as Andre de Ruyter has alleged, and putting that money into a vehicle dealership who buy fancy, expensive cars for you. The cars are not in your name, but you have full access to drive them, and they basically are your cars. Again, that's a form of money laundering. In fact, actually, the banks themselves have very little, almost in a way, to do with it, because there's a huge amount of constant work done in the banking industry in South Africa to make sure that they know their client and know where all the proceeds of money comes from. If someone phones up a bank and says, "Hi, I'd like to transfer $5 million into an account," the first question you're going to get asked is, where does it come from? And then you have to fill out huge numbers of forms, and it actually needs to be checked whether it's legal or not. Even money inside South Africa as well. You can't accept money unless it is very, very clear that it is not the proceeds of a crime. So it is rather monies which have been coming out of proceeds of crimes and perhaps gone into trusts and other areas like that. It can all be quite difficult and complicated. South Africa is not seen as a high terrorist financing or financing of weapons of mass destruction threat, but rather it is on the money laundering side. And of course, as well, National Treasury, President, and South African Reserve Bank all working very closely to try and stop that. Interestingly, when you're on the grey list, you actually are in the process of getting off the lists. So if you're on the grey list, it means that you are working towards repairing all the problems that you have. If you're on the blacklist, it means that you haven't done what's required and you are now blacklisted and can't be part of the international system. So returning back to being on the grey list, you have regular requirements you need to meet, and in fact I can actually read them to you. The 8 areas of strategic deficiencies identified for South Africa is that we don't have a sustained increase in mutual legal assistance that help facilitate money laundering. So we need to have a lot of investigations and confiscations of different types of assets. So that's what we're talking about. Not enough prosecutions and confiscations of proceeds of crime. They just want to see a lot of confiscations and prosecutions. That's really the bottom line here. But of course, there are many other, there are 8 points in total. And of course, they talk about the police and many of the other arms working close together. Of course, the financial services system. In fact, they actually talk about the fact that your law enforcement agencies need to have financial intelligence from the Financial Intelligence Center to do its job, because they need to obviously get that information as well. So you can just imagine a huge amount of information sharing. It also applies to estate agents. State agents also, anyone who's involved in any form of transaction where money can be covered up. Unfortunately, it's a bit of a closed box. We don't know where we are. We'd like to get regular monthly updates of citizens of South Africa and hear that, well, this month they asked us to do this and we did this, and therefore we've passed for this month. And it's not how it works, unfortunately. I think that the good news is that the awareness that South Africa passed through a very bad period of state capture and corruption was one of the reasons why, of course, as well, we did get into the grey list, but also they believe now that we're going to get off the grey list because we are going to move away from state capture and improve everything. So I think, what doesn't help are allegations against our Deputy President, Paul Matashile, that his family is involved in money laundering from theft of government contracts. We don't know whether it's true or not, but nevertheless, the fact that he may or may not be benefiting indirectly from it by perhaps staying in properties that might have been procured through certain types of corruption and money laundering. So all of those factors, again, create a negative atmosphere, which again will then feed through to FATF, and they'd have to have those areas looked at very closely. So you can see just how very broad, how very difficult this anti-money laundering area really is. I'm sure there are far more complex and intricate ways of doing all of these types of things that I mentioned as well. But that's really we are with the grey listing. The credit rating agencies have said grey listing in itself doesn't mean that you'll get a credit rating downgrade. In fact, all the credit rating agencies do is just one thing. They look at the credit worthiness or the ability of us to repay our debt. We've borrowed money. How likely is it we're going to repay it? It becomes less likely. In other words, your credit ratings fall if you have borrowed a lot more money. Or it becomes less likely if your revenue falls and you are not able to repay it back as easily. So that's really what the credit rating agencies look at. If the grey listing results, itself in a very negative effect on growth, which in turn results in a negative effect on revenue collection, then obviously it starts to have some impact on the credit ratings. But the credit rating agencies don't see it that way. So I think, from a grey listing perspective, we shouldn't panic if we continue to move forwards and do prosecute people, do confiscate their assets, and do meet the requirements that FATF gives us every few months. If we don't, then it will only be South Africa's fault that we allow state capture and criminality to persist. And of course, bear in mind that one of the three arms of the presidential initiative with the private business sector is to try and eradicate that. So that's really where we're sitting at the moment. I mean, we could go into the KZN mafia, the construction mafia. I think we've all heard about that as well. But you can just see how a lot of this is starting to catch up with South Africa now. It has a negative effect on financial markets. And if you look at the purchasing power parity of the rand, we think it should be around 15 to the US dollar. Of course, negative sentiment coming from financial market players, not just from our involvement with Russia, but also, of course, as well, the grey listing and other concerns do create some negative create some disinvestment for South Africa. We've seen net bond outflows this year, equity sell-off as well. Remember that the vast majority of financial market players are in the Western Hemisphere. So if you are going to go against what the Western Hemisphere believes you should be doing, then there are also, of course, as well, ramifications. Foreigners selling off your bonds also push up your yields, your long-term interest rates in South Africa, and that also, of course, has a negative impact.
Okay, thank you. David, how did you experience the grey listing on the market? Do you think there was a meaningful effect? Do you think maybe that's why the valuations of some of the financial stocks are still looking attractive, or do you think it was irrelevant, or what's your thoughts?
I don't think it's had a big effect. Where it does have an effect is at the institutional level. So, Annabelle gives you a very official position, and I think that's correct. But when you have to deal with a bank in Zurich, for example, or a bank in France or something, they apply grey listing. They treat you with the utmost suspicion. And therefore, as Annabelle mentioned, you to open up an account at one of these for a client to invest offshore, you have to jump through hoops and over hurdles. It's incredible. They ask all those penetrating questions. They treat you as though you are a money launderer unless you can prove otherwise. And just recently, we had a payment that was due to us from a bank held up because most of our payments go through New York. It was held up in New York for weeks as the fraud division there investigated the source of this money, which was commissions due to us. So I'm saying, although they won't answer why you're holding it up, they do go through some very, very deep analysis of those movements, which can be 100% legitimate. So we've been going through this for years now, for at least the last 5 or 6 years, where we've been treated with the utmost suspicion, particularly after the Gupta years and after the Zuma years. So while it might not be officially there, it's there. It's very difficult for us to do business, at that low level. And I think Annabelle mentioned the state agents. So whenever you're getting movement of money, I think there's always it's viewed very, very deeply. And anyway, so yeah. It's going to take us a long time to change that, Aniki. It's not going to happen overnight. We've got to get back to where we were many years ago, back to the 90s or early 90s, for those issues to be resolved.
100%. Thank you. So, David, also something else that you commented in the media about recently was the drop in the market cap of JSE. I think that's the last point that I'm going to touch on in terms of failures that we have experienced and seen, and how that bring about opportunities and possible headwinds going forward. But if you can perhaps just give us a little summary of how the JSE has suffered because of these failures and structural constraints.
It's actually a very interesting subject. And what triggered it off was I was talking to a friend of mine on a podcast, and we were looking at the JSE's price, not the JSE All Share Index, the JSE.
The share price.
And it's at the same price it was 10 years ago. 9 years ago to be exact, sorry. And, because I just took a line, I said, the JSE was trading at 91 Rand or 92 Rand at those levels. 10 years ago, it's made no progress. But that's all very well. But if you convert it to dollars, 9 years ago, you could have bought the JSE shares for $8.80. If you buy them today, if you sell those as a foreigner, you'll only get about $5.10. So it's a loss of 42%. So a lot of our companies, because of the Rand and because of the non-performance of the economy, have fallen back dramatically. So if you do the JSE itself, the JSE All Share Index, while over the last 9 years, and I'm using the same period, we're up about 58%. In dollar terms, we're actually down 7%. So it's had an effect. The Rand depreciation, the issues that we face with the economy have had an enormous impact on investors, foreign investors, even local investors, because your purchasing power hasn't increased. And I use purchasing power, I compare with the dollar. But what I want to say, and this is the interesting factor, and I need to go through this, I'll go through it pretty fast, I don't want to bore everybody, is that when I look at the JSE is actually 73% of the JSE's market cap is made up of businesses that don't earn any money in South Africa. They're outside of Africa. They don't earn anything in South Africa. In fact, it's only 27% of the JSE's market cap earn money in South Africa. And if I add market cap of mining companies, it's another 10%. And of course, included in the industrials, in which I'm part of that 27%, you've got shares like Aspen, Mediclinic, Vodacom, also a number of other businesses that do get a portion of their revenues from abroad. So the JSE All Share Index, the JSE that we deal in, is actually very small in South Africa. So why has it underperformed? Well, it's not unique. It's actually not unique. It's underperformed. The UK markets have underperformed. The European markets have underperformed. And when we say underperformed, I'm comparing it with the incredible growth that we've seen in American markets. The S&P, I think over that same period that I've been measuring the JSE, you would have been 2.5 times richer if you would have been in the S&P. And the reason is, and I can leave it here, you want to extend the argument, is that the US is made up of technology. It's made up of major businesses that have grown in technology, certainly over the last decade, from Apple to Microsoft, Alphabet, Amazon, and so on. That's where the growth has come. And it's the entrepreneurship, innovation in those businesses that has really driven the American markets to outperform our market, outperform the UK markets, and even to a large extent the European markets. So, we will talk more about it if you want to, but I think that's going to continue. I take this AI very seriously. I think AI is a game changer, and I think those businesses that I've mentioned plus are going to continue to dominate global markets. So yes, we can talk about the JSE, we can talk about the underperformance, but it's largely the composition of our shares, shares which are made up largely of international, that have underperformed the very huge gains that we've seen in technology.
Very interesting. On the back of what you have just said, I now have to ask you this. Do you think China is going down the same route, and perhaps that's why that government is delaying the stimulus that the market is demanding from them and wanting from them to announce, and they're holding back? Do you think they follow you and do a quick recovery? I like China. China will make 5% growth because Xi does not want to be embarrassed. And I'm sure that Annabelle has gone much deeper into the Chinese economy. I look at it from a consumer point of view. I don't trust them. I don't trust the Chinese government, and I'm very cautious of what they'll do in the tech area.
and in various other areas. So if I'm going to play China, I like to play it from a consumption point of view. And the one thing about the Asian economy or Asian economies is they're very aspirational. They love luxury goods. They love beauty products. They love clothing, and they love the best. And so when I do play China, where I do go into that side of the market, companies like LVMH, through maybe L'Oreal and through various Ferrari even, electric vehicles plus a luxury good. So from the Chinese point of view, I don't think that side is going to slow down. And even if we look at the numbers that came out, I think at the beginning of the week, the disappointment, when you looked at retail sales, they were up in jewelry. They were quite robust in jewelry. They were very robust in apparel, and in that side of the market where they did come down was on motor vehicles and infrastructure and other things. So I still have, that's the area that if you're going to look at China, look at it at the areas where the middle class are going to continue to buy. But from a broader perspective, I think to understand China, I think is very difficult.
Mm-hmm. Yeah, and they're obviously also still battling with the supply chain bottlenecks due to COVID. So a lot of dynamics, a lot of moving parts, very interesting conversations, very, very insightful, I think, value adds from both of you. I think we have run just about out of time. Annabelle, you did join us late, but it's like you had a tailwind because you caught up and made up for that little delay. So thank you very much. I think what I would like to do is just ask each of you for a closing remark and perhaps focus on something positive. What do you see as something that can be a positive or have a positive outcome, a headwind that we had or a challenge that we were facing that can turn into a nice opportunity going forward, just to end this session on a positive note after we have now shared all the headwinds of the economy and what can we look forward to. David, let's kick off with you.
Look, I'm the ultimate bull. I'm a super uber bull, and I think we're coming to, look, first of all, we've had a horrid 3 years. I don't think we've fully appreciated what lockdown meant for the global economy and also what Russia's invasion meant, And I think we're coming to the end of the disruptions that those brought in the markets. I like what I'm seeing in the US. I've no doubt that we're coming to the end of rate hikes there. I'm not going to debate whether it's going to be one or two more and what levels they'll be at and what levels of inflation we'll be at. But the market is sending a strong message. So I'm happy that the next 6 months are going to be a lot better than we've seen over the last couple of years. And I'm looking forward into 2024. I also think do not discount what we are seeing, the spend that we're seeing in artificial intelligence and how that's going to change business models. I think the last decade was a decade of social media, which I don't think improved productivity, but I think we're going to see a different story in the next few years of that. So I remain very optimistic on equity markets and where we're going. So don't be disheartened by perhaps what's happened in the past. I think there's a brighter few months and years ahead.
Thank you, and thank you for your time today. We really appreciate it. Annabelle, your closing remarks?
Yes, hi. Look, we're aligned. Certainly with David, and believe that we're going to see more likely interest rate cuts next year as opposed to interest rate hikes. We've actually come through a long interest rate hike cycle for South Africa from November 2021. And of course, through last year and this year, it's weighed very heavily on the consumer. We can really see the cracks showing and of course, huge consumer financial vulnerability. We think that next year we're going to see a strength in economic growth. We're looking at a lift to 1%. We see some improvement, yes, less on the load shedding side, less load shedding, and of course also as well, we are hoping that we see some traction made and improvement in the freight side, and of course as well reduction in crime. From a grey listing perspective, we think that we will get off the grey list eventually. We don't think it'll be as quick as the 18 months that Mauritius managed to get off it on, but we obviously think that it might take 2 to 3 years for South Africa because we are a very much larger, more complex economy. But we think we're going to get off it as well. I think that we are seeing better figures come out in the economy than people expected. So there was an expectation that we might get a collapse in the second quarter of this year. In fact, we didn't get a contraction in the first quarter. Interestingly, the Reserve Bank shows that there has been a rise in private sector credit extension. People are borrowing, businesses and households, more rapidly at a quicker pace than nominal GDP, which is always expansionary for an economy. So that helped us see a bit of an increase in growth in the first quarter. It looks like that might provide a bit of support in the second quarter as well. Perhaps we get a slightly stronger outcome to GDP than 0.2% for the year, but still very weak. Next year, as we said, we're looking for stronger growth and we're looking for a better global economic environment. And hopefully South Africa goes from strength to strength by trying to improve its relationships with the West and dial down its relationships with countries that the West does not approve of having, which in turn would be very helpful for our financial markets from a foreign investor perspective. But really, I think what they're particularly looking forward to is a strong, better economic growth environment. We managed to achieve 5 to 6% in the 2000s. South Africa can return there again, particularly if we manage to get rid of some of the dead wood in government, which prevents the regulatory change that we need to see the support to a strong economic growth environment in South Africa, both in terms of a massive rollout of renewable energy, transmission lines by the private sector. Interestingly, the United States is looking to fund some significant infrastructure of transmission lines in South Africa, and also, of course, as well, repairing our freight, rail, and other sections. South Africa's got a lot of the skills it needs. It needs to have better labor regulations to assist in that perspective, and we do have the financing available. The banking system stands very ready to lend. So those are all strong positives, and I think we just need to see the government regulatory environment become less socialist and communistic and more orientated towards a free market environment, which is what's needed to support and not suppress economic growth, in turn creating jobs as opposed to losing them, as we have really seen very, very poor unemployment rates in South Africa. There's a very strong likelihood of a bright future for South Africa if we do take a more market-orientated approach to governing the country. And of course, we'll see what comes through next year in the elections, and if we start to see the ANC lose more ground, as it has really delivered a very poor, weak economy and high levels of joblessness over the past several years, and in fact on a strong deteriorating trend.
Thank you. I couldn't agree more. Thank you so much. That concludes it then for this session. And I look forward to the next discussion with the two of you. Thank you so much for your time. Bye, everyone.
Thank you very much.
Bye. Bye.